Hi there, it's Bill with Smart Trades around 11:45 on Thursday, the 15th of July, and doing a quick review here and just going to throw out a little bit of a cautionary note since the S&P is coming back pretty well off its lows. At any rate, first off, let's look at the bigger picture. And again, we had a couple of ABCs down the way I'm counting it. And I think that this rally is still a B wave. Even a little more rally isn't going to necessarily break that pattern. This particular rally, we had a target of the previous retracement level, which was 73%. We've gone through there a little bit. I think we're up to around 75 or 76% retracement. But in the grand scheme of things, the patterns still look pretty similar. We're right at the trend line. So I'm going to hold to that count for now. That said, if we rally a whole bunch more through, say, S&P 1110, I would definitely question this scenario. On that note, a little bit of concern to me is the pattern on the hourly charts. And here again, this is just a blow up of that pattern we were just looking at. We're looking at the hourly cash instead of the daily futures, but it's the same basic pattern again. ABC down, X, and then a second ABC, and I've changed the color there for some reason, so that should be a red B. Anyway, you can see we've followed that. We're right on that trend line, and so far it's holding. Additionally, I'd like to bring your attention to the breadth ratios, which have really fallen off. And that tends to be a sign of potentially things to come. We could go back up, as is the nature of divergences, and make another moderate new high and actually create an even stronger bearish divergence. But as long as the breadth doesn't recover, that's probably another sign that we're heading down. That said, let's look at the other side of the coin here, and you can certainly count this as a corrective decline. The pattern off of the highs looks like a possible ABC if you count this as the peak, or even here you can count this as some kind of zigzag to the downside. It's not perfectly clear at this point. On the bearish side, it's possible to count this as a series of 1-2s unless we break out above the high at 1095.36. Otherwise, we're counting that as a B wave. But if we break above there, that breaks the scenario of 1-2s to the downside, and probably means we're going to see at least moderate new highs. Again, that doesn't break the long-term count, but it certainly calls it into question, and particularly if we get through again 1110 or so on the futures. And speaking of the futures, I want to bring your attention to this pattern off of the lows here on the cash. Perhaps a series of 1-2s. If that is the case, that also offers the possibility that we're going to go somewhat higher. That said, let's take a look at the futures here, and I'm going to compress this chart a bit so we can see similar data. And here is that low where we had those series of 1-2s on the cash, and on the futures you just have you made a new low actually, and then you have an impulse up, a decline that makes a higher low, and then off we go. This probably best counts as a 1-2, and then this rally would be a 3 here, and that perhaps we're in a 4 right now, assuming the bullish scenario again. So that said, let's take it one step at a time. As long as the highs aren't taken out, and on the futures that's actually the overnight high around 1099.25. If that's not taken out, it's still possible we've got a series of 1-2s to the downside, and indeed the top is in. So again, breadth supports that. So we shall see. And lastly, I want to bring your attention to the pattern. In fact, let's go back to the cash. And I wanted to look at the short-term intraday pattern today, and just a quick tutorial on how I actually sell these targets. And again, we had a target up around 1099, 1100 for that 73% retracement. And from there we've declined. Now what I do, I don't actually trade at the target. What I'm looking for is a confirming pattern off of that high, and in this case we have a rather impulsive looking decline and then a rather corrective looking rally back up. What I tend to do in cases like that is I want to sell the breakout of what I see as the B wave, and that would be right about here, and then bring my stop to break even. That way, assuming that we do get some follow through on this decline, you have a chance to bring your stop to break even and trail it down. And if we get a rally back like we're having right now, you can kind of reload, reboot if you will, and look again for sell signals on the way down. So at this point we're actually getting higher highs and higher lows on the intraday chart. So personally I would not be short here. But that said, all we need to do is flip that over and start getting impulses down and corrections back up, and I would be looking at the short side. And once again, at any rate, that's it for now. Hope you're having a great day, and talk to you soon.